If you want to get further information, I encourage you to watch my earlier videos. First one was published 3 months ago. I did an update on the GEO group on my analysis. Then we had the little squeeze going on where I did an extra episode. And now, 1 month ago already, I promised to deliver this video earlier. I'm sorry, I have failed on my own promise. I tried to give a little update. And now this is another update on the GEO group. So if you want to get further information, just watch my past videos on the GEO group. And what is also a very, very good platform to get information is the subreddit for the GEO group. Right now, 1,100 members. And when you browse for the due diligence topics and posts, you will find topics and discussions that are very, very valuable and provide you with a ton of information on the GEO group, on the circumstances, on the industry, on politics, and so on. So Reddit, especially this subreddit, has become a very good source of information for me and for other investors. So I really encourage you to take a look into it. It's not just all meme stocks and so on. Right here, we have very, very high quality information. So what happened to the GEO stock, right? On the 5-year chart, we see that the stock has been beaten down from a high of 32 plus dollars to a low of almost historic low. I think last time it was that low was in the 2000s, $5. That is super, super oversold from my point of view. But from there, we took a, what's that, 65% price increase. So if you were one of the lucky guys buying down here, you have done pretty well. And still on this price point, I think, and I will explain in this video why, to me, this is still a very good investment. But why was the stock beaten down? Well, I don't want to go back to 2017. I want to go back to 2021. So you have the executive order from the President Joe Biden in January 2021. To sum it up, it says the Attorney General shall not renew Department of Justice contracts with privately operated criminal detention facilities as consistent with applicable law. What's important, he's referring to the Department of Justice. So if we look at the organization here, the Department of Justice, what is really affecting the GEO group are the contracts for the Bureau of Prisons and the US Marshals Services. And if we look at the revenue sources from GEO, the Bureau of Prisons and the US Marshal Services make up round about a good quarter of GEO's revenue sources. So what's important to know is that the US Marshal Services, as far as I'm concerned, doesn't operate facilities on their own. They don't have any. So what they have to do is they have to rent facilities, and then they can decide if they have it run by a service provider like GEO or if they provide the staff themselves. And I don't have the article here right now, but if I remember correctly, I read an article where the US Marshal Service had to renew a contract, but because of the executive order, they had to find a workaround. So what did they do? They found a backdoor, a workaround that the GEO facilities were still rented from them, and they just had to figure out how they provide the staff that's running the facility. Okay, so GEO took a hit in rendering the services, especially with the staff, but they still have their facilities rented out. So what does this tell us? It tells us that the practical implementation of the executive order is not as simple as it looks. And if you say, well, there's the executive order, and this means that the private prison industry will take a hit, I wouldn't take that for granted, because you cannot just abolish a industry that has evolved over 40 years and really takes a big part of the whole incarceration system of the United States. You cannot just sweep in there with an executive order and in 2 years it's all gone. These are very, very complex services and that's a very complex industry that has to be reorganized. And if you ask me, the whole process to be reorganized in a way that follows suit to the executive order and what many people think will be the consequence of this executive order takes many, many, many years and will take a lot of reorganization and a lot of governmental processes and decisions. And as far as we all know, governmental decisions take a long, long time to be negotiated, to be processed, just by a very, very slow organization. This is how it works. And so this quarter of revenue sources is the one that's at risk. But the imminent risk, I think, comes from the Bureau of Prisons, but not really from the US Marshal Services, because they will find workarounds. So I'm thinking that we see an impact here, probably. And two important contracts, as far as I remember, will be open for renewal end of this year. I think October, November, December, some roundabout there. And we'll see how it goes from there. But I don't see a real big impact in this section from the US Marshal Service. Also, what are the current circumstances that impact the GEO group? And I didn't take much reference to that in my last video, but I want to do it here because some people asked me to, and I think it's very important information. There's a whole lot of information going around in the news. US crime wave hits new highs, US murder wave hits new highs. So there are a lot of statistics out there. And what I think is, well, the statistic is very clear on the murder rate, which is up significantly. And you see a spike here. It has been very high from the mid 80s to the mid 90s. And now we see a spike up here, which is kind of a bad development. If you see murders going up that high, it's not good for society. And also we have a breakdown here where we had the highest spikes. It wasn't in the Midwest, but nationwide, a 25% increase. That is very, very high, and you don't want to see that in your country. Another thing is the immigration crisis. Is a word that you read a lot. So when we look here, GEO is also providing the ICE facilities, which makes up almost a third of their all over revenue. And you have a huge number of immigrants coming into the US, especially from the South and states like Texas and California. So what we see here on the statistics is that in 2021, even if the year is only over half now, we have more than double than all over 2020. So what's happening is a lot of people are trying to get into the United States, and they have to be kept somewhere until their immigration status has been discussed and they have been officially granted immigrant status. So GEO is providing facilities, the ICE facilities, and this development is, it's always weird to talk about. I mean, it's good for GEO facilities, but it's something that the US and the citizens have to take care of, and you want to have a regular process for that. So it looks like to me that you won't get rid of the private prison and the privatization industry soon. And from the recent developments that I'm seeing, I don't think that GEO will be affected that negatively. But that is just my personal conclusion. And what does that mean for the stocks, for the GEO stock and for the company? Well, I'm gonna get into that right now. So why are the facilities important? When you want to know things about GEO, you don't always have to look at news about GEO itself, take their competitor, CoreCivic. I mean, the whole private prison industry is basically a duopoly for GEO Group and CoreCivic. And in the last virtual roadshow, which was end of July, they have something important to say on minute 43 and 45 seconds. The CEO says, Damon Hinninger says, they estimate that up to 100 or 150,000 beds are in facilities that are up to 100 or 150 years of age. So I don't know, but those super old facilities are designed in a way that I think could have been improved a lot more by now if you build them new. So you don't want to hang out as a prisoner or in a facility that's almost 150 years old. I mean, there have been renovations, I'm pretty sure of that, but still you read articles where governmental facilities don't even have air conditioning. So, and the infrastructure is not that good, and the building designs have improved a lot in the past 100 years, I think. So this is not very good, and that's one more reason why I think GEO and CoreCivic have a purpose. So the government facilities are not only bad, they are also overcrowded. You can get the statistics on that. And if you have old facilities which are overcrowded, then what should you do if you want the prisoners to have good environment and good conditions? Then you should get access to newer and modern facilities, which GEO and CoreCivic provide. So, in order to derive an impact for those two companies, I think the government facilities are not as good, and so first of all, you cannot just abolish the private facilities. Something has to happen. Even if you want to get rid of the private prison operators, what do you do with the facilities? You can put them out of business, but at least you have to buy their facilities. So, and what do you pay for the facilities? There has to be a price tag on that. We get to it in a bit later, talking about the asset value of the GEO company. But you know what I'm talking about. It's very important that you have to not only think, well, those companies are bad. You have to really think out of the box and in which environment those companies operate and all the circumstances. If you can be, I have no problem with if you say you are pro government and government should run the prison facilities. I have no problem with that. But you should also be realistic on that. And if you have old facilities compared to the newer private facilities, well, you can say we should get rid of the private prison enterprises, but you have to, there's no other way. If you want to do that and also get rid of the bad run government facilities, then you have to buy the new facilities, and they are expensive as of now. Because if you look at the construction costs and the replacement values of those facilities, they have increased a lot from the time when they were first constructed and built. So this is one thing that you should keep in mind. Also, a very, very good due diligence you can find on Reddit, and I wanna thank Financial Process 86 very much, and all the other people that are providing valuable information on Reddit. I'm doing it myself sometimes. Unfortunately, I don't have that much time. I have less time than I wish I had for summing up all this information, making the videos, and also writing on Reddit and summarize my thoughts and my thesis on different stocks. Thanks to all of you for putting in the time and the effort. It's not something that I take for granted, because I know how much time it takes, and you deserve all the respect for providing high quality information. So thanks to all of you out there who are putting in the time and the effort and sharing their thoughts on those platforms. Um, as I said, you can be pro government prison operations and you can be against private prison enterprises. I don't really care. I just want to be people to be realistic. And when you say A, you gotta say B as well. So be fair in your argumentation. Because what I really don't like is just people coming out of nowhere, even sometimes insulting you out of nowhere on those platforms. Like I've been called a psychopath from out of nowhere because I said, well, I like the GEO stock. Like, doesn't make sense. But if you say A, you gotta say B. And if you say you are against that, okay, challenge your own thought. That's something I encourage everyone to do. Always challenge your own thoughts. And if you are pro-government, read this post thanks to Bull Bear NYC1, who has posted this little discussion here. And he's making a point why he's saying the GEO Group is a socially conscious investment. It really, really is. And I couldn't have summarized it better than Bull Bear NYC1 here on Reddit. Really makes sense. And you should always be open for other people's thoughts if their logic is right and if their arguments are right. So I really encourage you, read those 7 points he's making. I think they are really, really good. So what's up with the stock? There was another guy making this due diligence in pictures. I'm very sorry I closed the tab where I could read your name, but thanks a lot to you out there. I think it really sums it up very, very well. And you can say, well, it's another Reddit due diligence, and there's only like the meme stock hunters and so on. Those guys try to really provide high quality information. And what's the thing here? Let me just look where I found the original post. So here we are. Just figured out that I had to adapt the screen here. So now you can see everything. So also figured out who the original poster was. It was Bull Bear NYC1. Thanks again for your input here. So what did he do? He came up with some different approaches to valuation. That was when the stock price was around about 750. He compared the earnings multiple for other US REIT equities, which are trading at, what's that? 25.5 times earnings. So if you take that and put them out, or 90.5 times earnings in 2021. So when you take GEO Group's earnings, you end up with a stock price of $27. If you take the cash flow multiple of 19.8, you will end up with a stock price of $37. And that is something that I explained, I think it was in my first video, was the replacement cost of the facilities. So what did he do? He took some facilities and the construction cost of the facilities per bed. And the average price was much, much more than GEO's construction cost. So if you take that and you reevaluate the assets of the GEO Group by their replacement costs of the facilities, you end up with a stock price of $50 to $80, which is a lot. And that's my core thesis, is that the assets are undervalued. So if you sum it up, the government facilities are overcrowded. They are super old. You have the new facilities by the private sector. And if you want to get rid of them, the government has, or I think they have to buy their facilities. And if you want to put a price tag on that, what will most likely happen? Most likely, they will negotiate a price that is between the historic construction costs of GEO and the new construction cost, what a facility like this would cost. And somewhere in between, they would find a price. And the price is much higher than what the market cap indicates right now. So huge upside just from a replacement cost point of view on the GEO stock. And this one is super nice. The moonshot potential. Okay, this involves a little fantasy, but what he's saying is, well, just look at what happened to the meme stocks, GameStop and AMC theaters. If you take their highest valuation and convert it to the GEO stock, you end up with a super high price of 290. Of course, there's a not zero chance that this might happen. I mean, we have seen the GameStop stock going up to, I think the highest intraday price was during the squeeze somewhere north of, I think almost close to $500. I'm not saying it could happen. It's likely to happen, but I mean, those are crazy times. And whenever you go into the different platforms, the people are only talking about short squeezes. Like every stock that has some sort of short interest could be a short squeeze target. I think people have lost some kind of touch to what a short squeeze really is and what has to happen so that a short squeeze really happens. But who am I to judge, right? So yeah, this is the ultra max super fantasy highest stock price ever in case everything that we wish for happens. But where I see a realistic price point is at least $15 for the GEO stock, up to 25, 27. So this is something that wouldn't surprise me if we get there. But at least a $15 price point from now, which is at the current price point from 850 something, 840, almost double. And if you went in earlier, at the all-time low of or at the 5-year low of $5, then this is almost triple. So you got a 3-bagger right there. Yeah. So far for the pricings. And if you say, well, where does this come from? This is I really like the term, an unsophisticated retail investor. Take a look at this. This is a chart from a book from Bruce Greenwald, the three slices of value. So you got the asset value, you got the earnings power value, and you got the value of growth. So the poster on Reddit added some infos here. So what basically brings it to the point, we got the undervalued real estate, equipment, and the reproduction cost of around 12 billion. Earnings power value, the franchise value. Not every business can just open a private prison shop. Needs connections, experience, and a track record. Requires capital and time to build. So CoreCivic and GEO have a 40-year advantage to anybody or to anyone who is thinking of going into that sector. And the value of growth, well, you shouldn't forget that GEO Group owns BI Incorporated, and they provide digital and tracking services for the detainees, you know, like the GPS trackers and so on. And also the data analytics from their business. So this could be regarded as a growth opportunity. I think I don't really I don't know how to see that kind of growth prospects. I don't really know, but for me it's enough to know that the asset value is way underpriced right now. So to sum it up, those kind of valuations, this is something I think there's more work into this Redditors efforts than in some stock analysts of the bigger companies. Yeah. So you should just go into the explanation of that post and all the thoughts that get in there. Also, we have had better than expected results in the second quarter of 2021. So GEO beat GEO beat revenue and earnings per share estimates, and also other facilities are reopening, and that's what happened after the Q2 earnings report. Another interesting thing is that at a price point of $7, GEO is earning so much cash that it can just buy back itself in 3.7 years. So even if you're betting on that GEO is running out of business in the midterm, and midterm, I'm thinking 5 years, 10 years plus, 10 years plus. At the current valuation, this is to me, that is just a no-brainer. If you have a company that is valued so low that it can buy back itself with the cash it's earning, I don't know. It's just there's so much negativity priced into the stock that it's oversold. And even if you don't like the company but you're in it for making money, I guess this is just a good opportunity. So, what has happened recently? We have the GEO Group earnings report from early August. GEO Group free flow from operations beats by 0.08 and beats on revenue. So everybody was thinking that the impact of the executive order is huge on GEO, but what happens? They did better than expected. And they have also raised their guidance for the rest of the year. So what does this tell us? It tells us the impact is not as bad as everybody's expecting. And if we look at this, because people are also asking about, will the dividend come back? So there are two things to talk about here, which is the status of the corporation of GEO Group and the dividend payments. So they suspended dividend payments because they need to deleverage. Everybody knows they have huge debt going on, and the bulk of it coming due in 2024. So what they want to do is they want to deleverage their company, which means paying back debt. So what do they have to do? They have to keep cash. And that's why they suspended the dividend, because if you don't pay out cash to the shareholders, you have the cash on hand and you can repay debt, which I think is an important step for the next years and for the future of the company and also for the profitability of the company. So suspending a dividend first means you don't get cash every quarter. And now GEO is thinking if they take the same approach like CoreCivic from transforming from a REIT status to a C corporation, which means more flexibility on the one hand, but also some other impacts, because as a REIT, you have tax benefits, which comes with the price of that you have to pay out dividend to the shareholders. But now, in order to unite those two goals, preserving cash, suspending dividends, and keeping three goals, the REIT status, they are thinking about one thing, which they have discussed in their earnings report. If we decide to maintain our REIT status, an additional dividend payment may be required before year end in order to meet the minimum redistribution requirements under the tax code. And now, the substantial majority of such dividends would be paid in stock and the remainder would be paid in cash. So what does that mean? If they want to keep the tax benefits and stay a REIT status, they have to pay a dividend. But they can choose between paying you a dividend in stock or in cash. I don't know the legal requirements, and I don't know the ratio of the split, but they can decide that you get a portion of the dividend cash and you can get the other portion in shares. Um, so this is actually pretty smart because they want to deleverage and preserve cash. They want to have the tax benefits and stay a REIT, but they also have to pay a dividend. So if they pay you the dividend as in the form of additional shares that you get, this is a super smart move. It's a super smart move for the company because they get everything that they wish for, and they don't have to change. They don't have to undergo major changes in the form of corporate restructuring and so on. And now we might say, well, what does it mean when you get the dividend as shares and not cash? I tried to. That's how I figured it out for myself. And if you have a different point of view, please let me know because I'm not 100% sure of it yet. But I think this is how it goes. So if you have a company, and let's say everything stays the same, the business stays the same, cash in and outflow stay the same, and at the end of the year you have a profit. So you have a profit in terms of a surplus of cash earned. So let's say at the end of the year, GEO has 150, does not pay a dividend over the year, and at the end of the year, they end up with $150 million in cash on their bank account. What does that mean? That means that when you have cash in the bank, this is just, and nothing else has changed. Then this means your business at the end of the year is worth $150 million more than at the beginning of the year, right? And now what happens? This 150 million, and let's say the share price is 750. 20 million shares will be issued to the shareholders out there. So now you might say, well, the shareholders get diluted. Right. They get diluted and you don't know how the market reacts to it. But let's say just from a business point of view, and a fixed stock price and everything stays the same. 150 million surplus cash, $7.50 stock price means 20 million new shares going out to the shareholders. So if the business or if the market cap or the value of the business has increased by 150 million, and this is getting distributed out to the shareholders, theoretically the price should stay the same if everything else stays the same. So you get shares that are worth a certain amount of money, but it's important that the value of the business gets distributed to the shareholders. And of course, you don't know how the market takes it, and if the majority of people does not put many thought into the whole process, at first it sounds like dilution, okay, share price must go down. At the end of the day, you will end up with a bigger portion of a bigger cake. That's all there is. So theoretically, the stock price should stay the same and you get real value on your hands. The cake gets bigger and the pieces get bigger. Or the pieces get more, but the additional pieces won't get distributed to other people. They will get distributed to the shareholders. I hope that you get my thought process. And maybe if I'm wrong, please tell me, but I think I'm not that wrong on this one. So this paragraph here is really encouraging. And it's an advantage compared to Core Civic, I think. Because now they have to pay taxes because they are a C corporation right now. And of course, they have more flexibility, but from a shareholder point of view, I think this is the better way. I don't know if you agree with my thought, but just let me know. Yeah, so more encouraging news because who bought shares? We have had insider buying The last CEO and founder of the business, George Soley, has bought recently, where do we have it? Here. Over $1 million worth of stocks at a price of $6.75. This is amazing. I mean, that number, he owns 3 million shares. Of course, he gets shares regularly due to his compensation plan. But it's always very encouraging when you see a CEO taking his private money and buying shares of his own company. This is very encouraging, and that was one news. I think to me it was important. I don't think many people saw it as important as I did, but it's a very good indicator, and this is one of the good signs also from a investor that I respect very much, Peter Lynch. He always said that when you see people buying stocks with their private money, CEOs buying stocks with their own private money, this is always a good sign, because usually they know something, and that's why they can figure out if they make a good deal or not, which is it's always a good indicator for me. And the biggest news and the most encouraging news is, guess who's back in town? My friend, Michael Burry. Not only is he betting against the ARK fund, the ARK Innovation Fund of Cathie Wood, which I think it's about time because valuations are super high, but that's a different topic. Maybe I do another video on that, because I also shorted this fund a while ago. But see what happened to Michael Burry's portfolio starting in Q4 2020. He had a position in the GEO group over almost 850,000 shares at the end of Q4. In another video, I explained why he sold in Q1 2021. It's not necessarily because he thought it was a bad deal, it's because of his risk management approach. Because he says, if a certain stock reaches an all-time low, he's getting out of it, because he does not want to have one single position messing up his whole portfolio. But we have seen him in the past getting back into positions that he recently sold. And on Monday, this last Monday, let's look at Sion's shareholdings. He went back into GEO with almost $18 million and bought 2.5 million shares. So this is amazing. This is amazing news for the shareholders, for us, for the investors out there who are seeking deep value in undervalued stocks. This is just confirmation that we are on the right way. To me, Michael Burry is one of the investors that I really, really respect a lot. He's one of, I mean, you can't think deeper than Michael Burry, I think. I cannot do it. He is putting so much work and effort and patience and focus on his research process. I would never ever be able to do so. So I'm proud to say I'm a coattail rider of Michael Burry investments in some stocks. Because you just can't beat the master. And he's back. He's back massively on the GEO stock. And as we see in Core Civic, he started with 1 million shares. He increased in Q1 to 1.1 million. And he increased again to 1.3 million shares here. So he's also betting on the duopoly, and he's knowing that those assets are way undervalued, and we are very likely to see price increase in the long term. Going one step further to the statistics, we have reached 1 billion in market cap. This is good because funds might be able to get into the stock right now. I know there's this whole ESG investment discussion going on, but many funds have a requirement that the market cap of their holdings is at least $1 billion. So we got that. And the other thing is Reddit Wall Street bets require that you can only post tickers that have a market cap of at least 1 billion. So maybe gaining momentum there, also gaining a lot of getting more controversial discussions, but I guess that's the fun part of it. The short ratio of float at the end of July, 35% short interest of the float. So is this short squeeze stuff? I think there's a potential for another squeeze. And it might happen when margin calls, some shorties will receive the margin calls from the brokers when the bigger institutional investors can pile into the stock. If they do, if you get, maybe you get an activist investor getting in there, and GEO is one of the biggest anticipated activist targets by, I think it was Bloomberg. So they have this rating, and GEO is in the top 2 of the most anticipated activist investor targets. So things might happen. And you saw what happened to GameStop when the activist investor Ryan Cohen went in. So just grabbing a bunch of shares, buying 10, 15, 20% of the company, and boom. Yeah, that's the potential we have here. I'm not saying it's gonna happen. Of course, I'm hoping it's happening. But I didn't go into the GEO stock because of the high short interest. I got into the GEO stock because I see the long-term price increase because of the undervalued assets. As we could see, in order to trigger a squeeze, we have to get back to 9th of June. We had an opening price of $8. We had an intraday high of $11, and we see that we had almost 200 million shares exchanging hands on those days, and since then the volume is boring. So yesterday we had almost 2 million shares. Nothing big happened, so this is what you have to deal with. Most of the time very boring, but GameStop had the same history. Very boring stock, very low volume, until you got some catalysts that improve the story, improve the sentiment for the stock, and gets back the greedy people on the menu plan, right? So here we are, low volume stock, not much of a price change, but we have had nothing but a price increase since mid of July. So we are on a good track. I'm not much of a chart analyst. I don't know how to analyze charts. It's not really my business. Of course, it's easy to see trends, and you can paint some fancy lines into the charts. But to be honest, if you're focused on value and not on price, like, what do I care about the chart? All right, so last note on the squeeze potential. This is also from Bull Bear NYC1 from his Reddit post. This is actually a nice chart. So what did he do? He was identifying the short squeeze targets, small cap companies, or yeah. In this chart, we see the market cap of the company and the short interest in the company. And below $1 billion market cap, you have the candidates that are the most likely for a real squeeze, because retail money can do a lot here. It gets more difficult with a higher market cap because although there are many retail investors out there, institutions have the big money, not some of sometimes uncoordinated retail investors where everybody has a couple of $1,000. It's very hard to move the needle up here. It's much easier down here. But what you see here is which are the real short squeeze candidates that provide real downside protection and have a profitable business. So, and that doesn't leave that much with GEO is the one with the lowest price earnings ratio and the one with the highest short interest in this group consisting of 3 companies. So if you are looking for a short squeeze target that has downside protection and is not just speculative, the quintessential message of this chart here is if you're looking for a meme stock, short squeeze potential with downside protection, not just gambling, GEO is the right candidate for you. I'm not advertising the stock, and I hope every one of you is smart enough to do their own due diligence, getting the infos themselves, also challenge my thoughts. This is just, I want to just present my thoughts on the stock, on the market, on the environment the company operates, and share it with you. Because maybe there are some helpful thoughts for you. Maybe you agree, maybe you disagree. And if you disagree, it's much more important to me that you let me know. So always challenge my thoughts and please provide critical, logical, and whatever kind of feedback you want. I'm always happy to receive new ideas, new inputs. And if my logic is wrong, then please help me out here. So far for GEO and this episode, I hope you could use some information. I hope you can use information. I hope this videos help you refine your own thought process, encourage your critical thinking, and if you have something to say, you have some kind of feedback, let me know in the comments. Check out my previous videos on the stock, on the company, how things developed. I think we are on a good path. If you are a pro-GEO investor, if you see value, deep value in undervalued stocks, this might be a story for you to invest in. If not, also let me know what you are looking at. I'm always interested in receiving new ideas. Take care for now. See you all in the next video.